Hello, welcome to the FMB's webinar on our brand new proposed standards for Indigenous not-for-profit organizations. Thank you for taking the time to watch our webinar. If you haven't had a chance to read about the new standards yet, then it is our hope that this webinar will provide you with an overview of what we are proposing. If you have questions or feedback after viewing the webinar, we have some contact information on the last slide. Don't hesitate to reach out to the Standards and Certification team here at the FMB. Let's get started with some introductions. I'm Sarah Berto. I'm a chartered professional accountant. I've been with the FMB for over 7 years as part of the Standards and Certification team. In my role as a senior manager, I support First Nations that are seeking FMB certification and also support the FMB standard setting activities. Now I'll pass it over to my colleague Billy to introduce himself.
Hi everybody, my name is Billy and I'm a manager at the Standards and Certification team at the FMB. I am a chartered professional accountant and I've been with the FMB for 2 years. Now I'll let Patricia introduce herself.
Thanks, Billy. I'm Patricia and I am also a manager on the Standards and Certification team. I am a CPA candidate and I've been with the FMB for 2 years. Next is Juan.
Thanks, Patricia. My name is Juan, and I'm also one of the managers with the Standards and Certification team. I've been with the FMB for over 3 years. Back to you, Sarah.
Thanks, Juan. This webinar has been designed for FMB clients, future clients, and other stakeholders who are interested in learning about the new not-for-profit organization standards. It will be especially relevant to Indigenous not-for-profit organizations and tribal councils who wish to work with the FMB and use these new standards. Here's what we hope you will take away from the session. We will provide you with an understanding of why the FMB is developing these new standards and who these new standards are for. We will do a brief overview of FMB's process for setting standards. We will walk you through the new NPO standards. And finally, we will explain how you can get involved and have your say on these proposed standards. Let's get started. In December 2018, the First Nations Fiscal Management Act was amended to include several new sections and changes. The purpose of these amendments was to clarify certain areas of the Act, address gaps, increase flexibility, and expand access to the Act. A number of these amendments were based on recommendations advanced by the FMB and the other First Nation institutions made over a period of several years. With these amendments, the FMB is no longer limited to providing services and developing standards for only First Nation governments who are scheduled to the Act. With the addition of new Section 50.1, the FMB is now authorized to develop standards and perform reviews for financial performance, laws or bylaws respecting financial administration and financial management systems for the 5 new types of entities listed on the slide, including, among others, tribal councils and not-for-profit organizations. The FMB is developing these new standards to respond to a need expressed to the FMB by Indigenous not-for-profit organizations, tribal councils, and other organizations to participate in FMB services offered under the Fiscal Management Act. Section 50.1 of the Act provides the FMB with the authority to develop relevant standards and to evaluate and report on compliance with the standards by these new types of entities upon request. Another section of the Act, Section 141.1, allows Canada to develop new regulations to adapt the Act in a way that would permit the FMB to certify these new entities and provide access to the lending services of the FNFA. This regulation is still under development, and the FMB cannot provide certification services until these new regulations have been enacted. As mentioned earlier, the changes to the Fiscal Management Act extend the FMB's mandate for providing services to 5 new types of entities. The NPO standards we are introducing have been designed specifically for tribal councils and not-for-profit organizations. For the purpose of this webinar, we will be referring to these entities collectively as NPOs. It is important to note that for not-for-profit organizations, the organization must meet the definitions set out in the Act, and this is a not-for-profit organization established to provide public services, including social welfare, housing, recreational, cultural, health, and educational services to Aboriginal groups or Aboriginal persons. We expect that a wide variety of organizations will meet this requirement and be eligible for FMB services. We are excited to begin working with and providing support to not-for-profit organizations and tribal councils. Let's talk briefly about FMB's process for developing new standards. The FMB has a set of standard-setting guidelines which drive the process behind the development of new standards and revisions to our existing standards. There are three important principles behind these guidelines: transparency, stakeholder input, and accountability. These principles are what have brought us here today. Stakeholder input is an important part of our process. We want to hear what you have to say before we introduce new standards. We use this feedback in refining our final set of standards. We will let you know a few different ways you can provide your comments later on in the presentation. Following the comment period and analysis of the feedback we received, the FMB plans to publish the final NPO standards sometime during Q3 or Q4 of 2020-2021. Now I'll turn it over to Billy.
Thanks, Sarah. What are the NPO standards? To provide some background knowledge in the development of these new standards for NPOs, it was important for the FMB to obtain an understanding of the unique characteristics of NPOs and how these characteristics might influence the selection of standards and ratios used to evaluate the financial management and financial performance of NPOs. From FMB's extensive research, the FMB noticed significant diversity among the various NPOs sampled. There were diversity in the types of services provided, organizational size, its revenue sources, the financial reporting framework applied, and its regulatory framework. Overall, the FMB's NPO standards will be different from the FMB's existing standards for First Nation governments to reflect the different structures and operations of NPOs. As a result, the FMB's new NPO standards will have a different look and feel, but retains a similar underlying structure to the FMB standards for First Nation governments. Essentially, the proposed NPO standards can be viewed as two parts. Part 1 will cover financial management practices. This is similar to FMB's existing FAO and FMF standards for First Nation governments. For Part 1, the NPO will need to demonstrate that it has amended its own corporate bylaws, established any policies and procedures, and demonstrate that it's implemented the financial management practices required by the NPO standards. The second part will cover financial performance measures. This is similar to FMB's existing financial performance standards for First Nation governments. The NPO will need to demonstrate that it is in compliance with a set of financial performance ratios based on its historical financial performance. Each part of the proposed NPO standards will be explained in further detail at a later point in this webinar. So, what is a compliance opinion? As mentioned earlier, the newly amended FMA now allows the FMB to evaluate the NPO's financial management practices against standards created by the FMB. As such, the compliance report issued by the FMB will state whether the NPO was in compliance with FMB's standards or not. Now, let's take a deeper dive into Part 1 and Part 2 of these NPO standards. The first part of these NPO standards focuses on the financial management practices designed specifically for NPOs. These new standards will be the framework used by the FMB to assess an NPO's internal control environment and then eventually be used to determine eligibility for certification. One of the primary objectives of these new NPO standards is to establish standards for best practices in financial administration. When considering standards to include in the financial management section of these NPO standards, the FMB has considered the unique regulatory and operating environments of NPOs, as well as other established frameworks for financial management and financial reporting. The FMB had reviewed existing resources among the NPO industry to identify best practices. This research included reviewing existing policies from a sample of NPOs and advice from external advisors and expertise in the not-for-profit sector. The illustration noted in this slide shows the various sources used by the FMB in its research and development of these proposed NPO standards. You will note that the FMB has relied heavily on the existing FMS standards and FAO standards for First Nation governments, which have set the standards for strong financial management practices to date. These standards were assessed for applicability and modified to meet the unique differences of NPOs. Based on all the research performed by the FMB has developed an internal control framework for NPOs, of which the proposed NPO standards have been tailored to. These NPO standards include detailed requirements within each 5 key areas of financial management. The 5 key areas are human resources, bylaws, policies, and procedures, planning, reporting, and oversight, recording, safeguarding, monitoring of assets, controls over purchases, payables, and payments. A complete listing of the proposed financial management practices can be found in a separate publication called Not-for-Profit Organizations Proposed Standards, which can be downloaded on the FMB's website. These financial practices have been developed by the FMB, knowing that NPOs are subject to their own articles of incorporation and corporate bylaws that set the rules for governing and operating the organization. The NPO standards will require the NPO's corporate bylaws to contain some minimal provisions related to financial administration. Furthermore, NPOs already have existing corporate bylaws in place, as required by the legislation under which the NPO was incorporated. As such, it's anticipated that many of these requirements contained in these NPO standards may already be reflected in the corporate bylaws of the NPO. The financial management section of these standards will require the NPO to amend its corporate bylaws to include the required financial management practice as necessary, or will require the bylaw to contain a requirement to establish policies and procedures where the practices can be documented instead. To put part 1 into perspective, this slide shows an example extracted from our proposed NPO standards. The first component requires an NPO to include certain provisions in the corporate bylaw. In this example, Pro 18 describes the bylaw requirement for an annual appointment of a licensed and qualified public accountant to conduct an audit over the NPO's annual financial statements. The second component requires the implementation of this bylaw, where the NPO must demonstrate that they have appointed a public accountant to conduct the annual audit. Now, I'll let Juan talk about part 2 of these proposed NPO standards.
Thanks, Billy. Part 2 of the NPO standards focuses on financial performance ratios, or FP ratios, which will be used by the FMB to assess NPO's historical financial performance and provide our compliance opinion. Part 2 includes 5 FP ratios with thresholds that will require NPOs to meet in order to showcase strong historical financial performance. As Billy mentioned, this framework is consistent with the FMB's existing financial performance standards for the First Nation governments, since the primary purpose of the financial performance evaluation will ultimately be the same. For example, assessing eligibility to become a borrowing member of the First Nations Finance Authority. Many of the same principles used in the existing FP standards remain applicable. Some of the key principles include FP ratios will be calculated based on the audited financial statements for the 5 most recent years, and a weighted average or average over a 5-year period will be used to measure whether the NPO is meeting the required threshold. Building on the FMB's already existing FP standards, the FMB conducted extensive research into financial performance ratios. The research included a wide variety of accounting and not-for-profit literatures and resources. During the research phase, the FMB identified numerous financial performance ratios. Then they were further evaluated based on a performance measures framework established by the Canadian Accounting Standards Board. As you can see in the 7 hexagons, the framework includes 7 unique characteristics that are evaluated when developing financial performance measures. At the end of extensive research and analysis, including calculating selected FP ratios, the 5 financial performance ratios were chosen by the FMB to measure NPO's ability to sustain and grow its fiscal balance, ability to sustain its investment in tangible capital assets, and the ability to manage overall level of debt. Diving into the first FP ratio, physical growth ratio, it will measure the NPO's ability to sustain and grow its financial and service capacity. Ratio greater than 0 indicates that revenue is growing, and less than 0 may indicate that NPO's financial capacity is decreasing. Based on our quantitative analysis performed, the proposed threshold is that an average fiscal growth ratio for the 5-year period under the review must not be less than -5%. The negative threshold will provide some flexibility for unique situations such as changes in NPO's operation or service capacity. To support fiscal growth ratio, the next ratio is the operating margin ratio, which will measure the NPO's ability to sustain its fiscal balance. A ratio greater than 0 indicates that sufficient revenue is generated to meet the expenses, and less than 0 would indicate that the NPO is spending beyond its revenue base. Based on our extended analysis, the proposed threshold is that an average operating margin ratio for the 5-year period under review must not be less than -5%. We expect NPOs to operate at or near a break-even point, and -5% provides some flexibility to accommodate unique situations such as operating in a deficit and sustaining its operation by drawing from accumulated reserves. The remaining FP ratios will be introduced by Patricia.
Thanks, Juan. So the next ratio is the asset maintenance ratio. And this is a measure of the NPO's ability to sustain its investment in tangible capital assets. This ratio assesses if the overall asset base is increasing or being replenished at a rate equal to or higher than the consumption of the assets. Additionally, this ratio will be an indicator of the willingness of the NPO to maintain the current level of investment in capital assets and provide a measure of the NPO's ability to execute a tangible capital asset maintenance plan. A ratio less than 1 indicates that the assets are being consumed at a rate faster than they are being replenished. The FMB recognizes that not all NPOs are dependent upon infrastructure and tangible capital assets for the delivery of their services, and some may not have material tangible capital assets at all, making this ratio not relevant to the FMB's financial performance assessment. In these cases, the FMB is proposing that this ratio would not be applicable if an NPO's total original cost of tangible capital assets is below $500,000. This threshold is a similar concept with existing accounting provisions contained in the CPA handbook for NPO accounting for thresholds for small not-for-profit organizations, which exempts them from the tangible capital asset accounting rules. Further, if an NPO chooses not to capitalize its tangible capital assets as permitted within existing accounting rules, then the FMB would conclude that the asset management ratio is not applicable when reporting on the overall financial performance ratios. Based on our extended analysis, we propose threshold is that an average for the asset maintenance ratio for the 5-year period under review must not be less than 100%. The rationale for this threshold is to ensure the overall asset base is increasing or being replenished at a rate equal to or higher than the consumption of the assets. The next ratio is the net debt ratio, which will measure a NPO's ability to manage its overall level of debt. Specifically, this ratio will measure the size of the net debt burden in relation to 1 year's annual revenue available to service this debt. This ratio will indicate whether an NPO's debt load is sustainable or potentially restricting its financial flexibility to incur more debt. An increasing ratio will indicate total debt is becoming more onerous to the NPO, which could lead to long-term sustainability concerns. A decreasing ratio will indicate that the NPO's capacity to incur more debt is strengthening. The FMB anticipates that many NPOs looking for certification are service-based entities with little or no debt. For NPOs providing public service, long-term debt may be used for the construction or acquisition of tangible capital assets. Based on the qualitative analysis performed by the FMB, the threshold being recommended is that a weighted average net debt ratio for the 5-year period under review must not be greater than 50%, or the current year net debt ratio must not be greater than 50%. The last ratio then is the interest expense ratio, which will measure an NPO's ability to manage its overall level of debt. Specifically, the interest expense ratio measures the size of the NPO's interest expense burden in relation to annual revenues. Based on the quantitative analysis performed by the FMB, the threshold being recommended is that an average for the interest rate expense ratio for the 5-year period under review must not be greater than 5%. Again, all 5 of the financial performance ratio thresholds are consistent with existing FMB standards for First Nations governments. So we want to hear from you, and how can you have your say? To help the FMB develop a comprehensive set of financial management standards and financial performance measures, we need feedback from the organizations who will use these standards. User input is critical in developing standards that are relevant and responsive to NPO needs and can lead to changes to the final standards, and we welcome all comments, including additions and suggested changes. In addition, the FMB has developed a series of survey questions that will help the FMB in this development process. The first set of questions are intended for NPOs and will help us to establish a benchmark and understand the practices currently in place at NPOs. The responses to these will help us assess the relevance and achievability of the proposed standards. The second set of questions are for providing feedback specific to the proposed standards. For convenience, these questions can be answered using an online form located on our website, and on the hyperlink there, you will find it. Alternatively, written comments may be sent by email to the FMB Standards and Certification team at standards@fnfmb.com. Given the disruptions caused by the current COVID-19 situation, the FMB wants to allow sufficient time for all interested stakeholders to provide comments and any feedback on these proposed standards. Therefore, the FMB has extended the usual 45-day comment period and requests that comments on the proposed NPO standards be provided by September 30th, 2020. So after all that, you probably have a few questions. So we put a couple of FAQs together. The first one is, can NPOs receive certification from the FMB? No, at this time, the FMB is only authorized to issue a compliance opinion as to whether the NPO has achieved the proposed standards. A compliance opinion does not mean certification. It is anticipated that the NPO certification process will involve two parts. The first part will consist of financial management system review, requiring evaluation of the NPO's corporate bylaws and implementation of those bylaws against the FMB's NPO standards. The second part will consist of a financial performance review, consisting of a review of the NPO's historical financial performance against the performance measures established in the FMB standards. The next FAQ is, will the FMB have sample bylaws and policies available? And the answer is yes. We will have samples available, and these are currently under development. Next, is there any cost to the services for NPOs? No, all of the services offered by the FMB will be free of charge. And then lastly, can my organization start working with the FMB now? Yes. Definitely. However, services are limited under the final NPO standards. Oh, sorry, services are limited until the final NPO standards are approved by the board. So I would like to thank everybody for taking the time to watch this webinar. And if you have any questions, please feel free to reach out to the FMB. Thank you.